Have you ever wondered about transferring your TSP to an IRA? Hi, John Raleigh, Certified Financial Planner with Plan Your Federal Retirement. And today we're going to talk about a possible discussion you might have sometime in the future with a financial advisor. And that's whether or not your TSP is the right vehicle for you through your retirement. Now, we know your TSP is a powerful, powerful tool to help you be able to get to retirement. The savings vehicles that you have available in there, with the funds that you have available, plus the L funds that are a combination of the other funds that are in there, allow you to have great options to be able to accumulate wealth, and have helped many, many Feds retire to a successful retirement. A lot of times, though, you'll find there might come a point where those particular options are not going to benefit you the way you want them to do as you're going through retirement. So let's talk about the pros and cons associated and why you might make that decision. The first option, or the first pro that's there, has to do with the options you have available. You know, with the TSP, you have options that are there. I'm sure you've looked at them very closely. If you're into the financial side of it that way and you're accumulating wealth and all excited about getting ready for retirement, I understand that you're in there. But when you look at the gamut of all the investment possibilities that are out there, the TSP is somewhat limited compared to the full global amount of investment categories that you have available to invest in most IRAs outside of the TSP. All those investment vehicles help you get to where you're looking to go. There's only two main categories that most custodians of the IRAs don't allow you to invest in. Those two categories are collectibles and life insurance. Outside of that, you have an ability to invest in what your needs are, and it works and can work very efficiently for you. You also have better access to financial advisors due to the global access that's available in the investment options. Depending on the type of investment you use in an IRA, the internal fees can be less, and the internal fees are associated with what it costs you to invest in a particular type of investment. And you know that with the TSP, there's internal costs that are there, which are very good and normally very low. You also have the ability to consolidate other retirement plans into one retirement source, which then helps your bookkeeping, helps you be able to control better the required minimum distributions that you'll have to do over 70 and a half, and make your life a little bit simpler when you get to retirement. And that's one of the reasons why people will look at it. The last one, and even though the TSP has made some changes, there are a lot more account withdrawal options in individual IRAs than what you see with the TSP. Now, the TSP has done a wonderful job making changes, especially in their last update, but that is just another reason why to consider it. But now let's spend time on the reasons not to, because like I said, this is a powerful tool for you, and it has worked and worked really well for many, many Feds. First of all, the difference between bankruptcy and creditor protection. What happens is with the government-sponsored plan, the TSP, or 401ks or 403bs and other company-sponsored plans, they have better bankruptcy and creditor protection than most of the IRAs. So what does that mean? If you get sued or you go into bankruptcy, there are options which allow your money to be protected and be more protected. So that's one of the reasons really to take a look at it and say, if that's going to happen or there's a potential of that happening, maybe I don't want to make the move. Also, if you're working and you're working beyond required minimum distribution age, okay? Now it's getting older and older with the most recent tax law changes, but if you're continuing to work and you're getting money in, if you have your TSP or you have a 401k or a 403b or one of those sort of assets and you're contributing to it, you don't have to take required minimum distributions out of those accounts till you retire. So that is a positive thing. In the IRA, once you hit your RMD age or your requirement minimum distribution age, you have to take your distribution. The third and last con, and it can affect some people, but it's age related, and that's the loss of penalty-free withdrawals prior to 59 and a half. So what will happen is your plan has the ability to be able to take distributions prior. It's just a matter of following through the rules associated with it. So as you can see, there's pros and cons on whether or not to take distributions out of your TSP and possibly move it to the IRA, roll it over in that sort of situation. If you get it and you understand how it works, That's fantastic. If you don't, that's totally understandable. Hire a competent financial advisor to help you through the process so you understand the pros and cons. And of course, if you'd like to sit down and meet with us for an initial consultation so we can answer your specific questions, go ahead and go to our website, planyourfederalretirement.com. And until next time, happy planning.